Something very strange happens every time silver starts telling the truth. The screen freezes, trades halt. Prices suddenly collapse in seconds. News headlines scream panic. And just like that, the public is pushed into fear while something much quieter happens behind the scenes. Because when silver trading halts and paper prices crash, it is almost never about chaos. It is about control. And today, I'm going to show you how artificial panic is created on purpose, why paper-silver crashes never reflect real demand, and how physical silver is being. It's quietly locked down while the world is distracted by red candles on a screen. Before we go any further, take 1 second and hit like and subscribe. This channel, Global Silver Truth, exists to break down what the mainstream refuses to explain. Subscribing helps this message reach more people who are tired of being misled by surface-level narratives. You won't hear this perspective on financial TV, and you definitely won't see it trending on social media. So if you value real insight over noise, stay with me. Now, let's start with a simple question. Why does silver always panic on paper, but never disappear in the real world? Every major silver crash looks dramatic. Prices drop fast. Trading halts are triggered. Commentators rush to explain that demand collapsed, that investors ran away, that something broke. But if demand really vanished, you would see it instantly in the physical market. Dealers would be flooded with inventory, premiums would collapse, supply would sit untouched. And yet the opposite happens almost every single time. During paper crashes, physical silver becomes harder to find. Premiums rise. Delivery delays stretch longer. Large buyers step in quietly. Vault inventories don't explode with surplus, they shrink. That alone should tell you something important. The panic you're shown is not the panic that matters. Trading halt is one of the most powerful psychological tools in modern markets. When the screen freezes, the human brain fills the gap with fear. People assume the worst. They imagine losses accelerating. They assume insiders know something terrible. When in silver, halts rarely signal disorder. They signal that the paper market is being protected from revealing stress. Paper silver is not silver. It is leverage layered on leverage. Futures, contracts, options, ETFs, swaps, and unallocated claims create a paper price that is many times larger than the physical metal that actually exists. That system works only as long as most participants never demand delivery. The moment real stress appears, the system must slow things down. That is where halts come in. When trading halts, the message to the public is chaos. But the message to institutions is coordination. It buys time. It allows large players to reposition. It allows margins to be adjusted. It allows liquidity to be redirected. And most importantly, it allows physical supply to be quietly secured without competition from panicked retail buyers. The artificial panic narrative always follows the same script. Headlines say silver is crashing. Analysts blame inflation expectations, interest rates, or risk-off sentiment. Retail investors see red and sell. Weak hands exit paper positions. And while that is happening, something very different unfolds off camera. Industrial buyers do not cancel orders during silver crashes. Governments do not stop accumulating strategic metals because of a chart pattern. Mints do not suddenly find excess supply. In fact, many of them reduce sales or delay shipments. That tells you the real story is happening somewhere else. Think about this logically. Silver is essential for electronics, solar panels, medical equipment, military hardware, and energy infrastructure. None of those needs disappear overnight. A paper price crash does not reduce global electrification plans. It does not reverse AI expansion. It does not shut down defense procurement. So why would real demand collapse? It doesn't. Only the narrative does. Artificial panic is designed to separate the public from the asset while control shifts quietly behind the scenes. This is not new. It has happened repeatedly in commodities where physical supply matters more than financial perception. The difference with silver is that the gap between paper and physical has become too large to hide easily. Every time silver approaches a level where delivery pressure increases, volatility explodes, not gradually. Suddenly, that is not natural price discovery. That is pressure release. It is the system forcing an outcome before physical constraints become visible. Notice how fast crashes happen compared to rallies. Rallies are slow, choppy, frustrating. Crashes are sharp, emotional, and decisive. That asymmetry exists because fear moves faster than confidence, and the system uses that fact deliberately. When silver trading halts, ask yourself who benefits. It is not the retail investor who cannot trade. It is not the long-term holder who understands the metal's role. It is the leveraged paper structure that needs time to rebalance without triggering delivery stress. Hidden physical control is the quiet side of this story. While paper silver is sold aggressively, physical silver is not dumped, it is absorbed, often by entities that never appear in headlines. Central banks don't publish silver strategies. Sovereign wealth funds don't announce metal accumulation plans. Industrial giants don't telegraph long-term inventory moves. They act quietly because publicity drives price. You wanted to secure large amounts of physical silver at favorable prices, you would need the public distracted. You would need panic selling. You would need headlines screaming collapse. And you would need trading halts to prevent disorderly moves upward when real buyers step in. This is why paper price crashes often mark accumulation phases, not rejection. The public sees failure. Institutions see opportunity. Another important detail is how quickly narratives flip. One day silver is collapsing. A few weeks later, shortages appear. Premiums spike. Delivery delays are blamed on logistics. Suddenly the crash is forgotten. But the metal never returned to previous availability levels. Something changed quietly. The paper price is designed to move sentiment, not reflect reality. Physical silver reflects reality, not sentiment. When those two diverge sharply, it tells you which one is being managed. Here on Global Silver Truth, we don't focus on daily price noise. We focus on structure, and the structure of the silver market depends on confidence in paper claims. Artificial panic is a tool to maintain that confidence by preventing too many participants from asking for what they are owed. If everyone demanded delivery at once, the system would not fail slowly. It would fail immediately. That is why stress must be released early through volatility and fear. Now think about how this affects you. If you only watch charts, you will always feel late, scared, or confused. If you understand the narrative mechanics, you can see through the noise. You stop reacting emotionally to moves that are designed to trigger emotion. Silver trading halts are not warnings of collapse. They are signals of importance. Assets that don't matter are allowed to trade freely. Assets that expose leverage get controlled. This is why silver is treated differently than most commodities. It sits at the intersection of money, industry, and geopolitics. That makes it dangerous to misprice for too long. So instead of allowing natural discovery, the system uses volatility as a pressure valve. As this decade moves forward, physical silver control will matter more than ever. Energy transitions, digital infrastructure, and defense needs all compete for the same limited supply. Paper narratives cannot create metal. It can only delay recognition of scarcity. When the delay ends, it won't be announced with a headline. It will be felt through availability, not charts. That is why paying attention now matters. If this perspective makes sense to you, let me know in the comments. Do you think silver crashes reflect real demand, or do you see the pattern of artificial panic and hidden accumulation? Share this video with someone who still believes the paper price tells the whole story. And if you want to stay ahead of the narrative instead of reacting to it, make sure you're subscribed to Global Silver Truth, because the next time silver trading halts and panic floods the screen, you'll know what's really happening, and you won't be distracted when control quietly changes hands.